If you are working out supply and demand zone and price keeps stopping you out, you might probably be missing one thing, which is market structure. In this video, I'm going to break down everything you need to know about market structure, how you can be able to identify the trend direction of market by merely looking at it. And if you are a beginner trader, you might like to watch this video to the end because I'm going to break down anything you need to know about market structure. I will not be using big grammar in a way that some of your mentors did. I'm going to break it down in a very simple way that even a kid of 5 years will understand it. Also, at the end of this video, I'm going to show you how you can use market structure, supply and demand zone to find a very high probability trade. Hello guys, welcome back to my channel. If you're watching this video, make sure you like, share, subscribe, comment, follow, turn on the notification button so that you can get the next video when I post it. So what is market structure? In a simple way, market structure is simply the overall pattern of how price move over a period of time. That is, if the price is going up or if the price is going down or if the price is consolidating. That is the simple definition of market structure. There is no need of complicate anything. So market structure is simply the overall pattern of how price is moving over a period of time. It helps to tell if the price is going up, that is if the price is in an uptrend, or if the price is going down, that is if the price is in a downtrend, or if the price is consolidating. So this is a simple definition of market structure. So since you already know the definition of market structure, there are types of market structure. That is, when you are looking at the charts, what is the price doing? That is what I mean by types of market structure. So in the types of market structure, we have what is called uptrend. We have what is called downtrend. And we have what is called ranging. Or you can call it consolidation. So these are the types of market structure. So let me teach you the meaning of uptrend. So when we talk about an uptrend, what does it mean when we say that the market is in an uptrend? When we say that market is an uptrend, it means that the market is going up. That is, the market is doing higher highs and higher lows, breaking the previous swing highs. This is what I mean by higher highs and higher lows. When the market is doing this, it means that the market is in an uptrend. When the market is breaking the previous highs, and then keep pushing to the upside, this is when you can say that the market is in an uptrend. So now you have understand the meaning of uptrend. Let's go to downtrend. What does it mean when we say that the market is in a downtrend? When we say that the market is in a downtrend, it means that the market is breaking the previous swing lows. So this is what I'm talking about. When the market is breaking this previous swing lows, doing lower lows and lower highs, you can see breaking the previous swing lows and then continue pushing to the downside and then break another previous swing low, push to the downside, break another swing low, push to the downside. This is when you can see that the market is in a downtrend. So you can see now, uptrend is when the market is breaking the previous swing highs, going up. While downtrend is when the market is breaking the previous swing lows, going down. You can see that this is a clear opposite of this. So whenever market is in a downtrend, it's a clear opposite of when market is in an uptrend. So you can understand this now by me looking at my screen. You already know what I'm trying to say here now. This is uptrend when market is breaking the previous swing highs, and then this is a downtrend when market is breaking the previous swing lows. So let's go back to ranging or consolidating. What does it mean when we say that market is in a range or consolidating? What it means that market is just consolidating, respecting the previous support and resistance levels. You must have known what is support and resistance now. Then when market is respecting the previous resistance, whenever market comes to this resistance level, it goes down, and then whenever it comes to this support level, it goes up. This is when you can see that the market is ranging. It's so simple. There is nothing to complicate here. So now you have understand what is market structure. Now you have understand the types of market structure we have. We have uptrend, we have downtrend, and we have ranging. So let me show you what you can call properties of market structure. That is the important things you need to know about market structure. Number one thing you need to know about market structure. Number one note you need to mark about market structure is break of structure. Break of structure. This is the short formula of it. Break of structure. Another thing you need to know about market structure is we have what is called change of character. For me, these are the two most important things you need to know about market structure. If you know and master these two particular things in market structure, I think you're almost good to go. So let's go over to what is break of structure. So break of structure is when price break above the previous swing highs or previous swing lows. This is a simple definition of break of structure. So let me show you an example of what I mean by break of structure. You see, this is an uptrend. When price is doing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So what is break of structure now? Break of structure is, you see, that moment that price break above this high here, this is a break of structure. The moment that price break above the previous high here, also this high here, the moment that the price break above this previous high here, this is a break of structure. And then here again, price break above this previous high here, this is a break of structure. Can you see it now? It's clear. There's nothing to complicate here. So whenever price break above the previous high or a previous low, let me show you the case of downtrend. Whenever price break above this previous low here, this is a break of structure. Break above this previous low here, this is a break of structure. Break above this previous low here, this is a break of structure. So whenever price break above the previous high and then continue moving up, and you must note that when price break above the previous high, it must close with a body, not with a wick. By that I mean if a body is like this, if this is a candlestick now, and then you can see price close with a body here, this is a valid break of structure. And then when you have something like this, and then this is a candlestick, and then this is the body, and then this is the wick, this is an upper wick, this is a down wick, and then something, you have something like this. This is not a valid break of structure to me. Although some people can call it a valid break of structure, but this is not a valid break of structure to me, because for a break of structure to be valid, the price must close with a body, not with a wick. Now you have understand what is break of structure. So let's go over to change of character. This is a short way of writing change of character. So what is change of character? Change of character here, this change of character you are saying here is simply a sign that a price show to a trader whenever it want to reverse. Take it like a price is giving you a sign that I'm going to reverse. So any moment from now, I'm going to reverse. That is, I'm going to be going from an uptrend to a downtrend. I'm going to be going from a downtrend to an uptrend. And there's no need to complicate it. Now you understand it. So let me show you now what is change of character. When you can see change of character. So price is in an uptrend now, going up, doing higher highs and higher lows. And then all of a sudden, you start seeing something like this. And then price break past this previous higher low here. Price break past this previous higher low here with a body giving us a clear sign of break of structure. And then price pull back and then continue going down and then pull back and then continue going down. You can see now, by now looking at this chart, you can see that price was going up before in an uptrend, and then all of a sudden price start going down in a downtrend. So what you see here now is a clear sign of change of character. Can you see it? This is a clear sign of change of character. Price is telling you that I'm going to reverse any moment from now, or any moment from now, I'm going to going from bullish to bearish, or any moment from now, I'm going from bearish to bullish. This is a clear sign of change of character. Now you understand what is change of character. So let me give you a quick recap of what I've been saying since. I started by saying what is market structure. This is a simple form of writing market structure. And I said that market structure is simple overall pattern of how price move over a period of time. That is, how is this price moving? Is this price going up? Is this price going down? Is this price consolidating? This is a simple definition of market structure. Then I went on to telling you types of market structure, and I said that we have uptrend, we have downtrend, and we have consolidation. You see, we have uptrend, we have downtrend, and we have downtrend, and we have consolidation. These are the three types of market structure. So what it means that whenever you are looking at the chart, price can either be going up or be going down or going sideways. These are the three things that must happen whenever you look at the chart. It can either be going up, going down, or going sideways. It's a must that price must do one of these whenever you are looking at the chart. So from telling you types of market structure, I went over to telling you the properties, the things that you need to know about market structure. And I said that you need to know what is break of structure. And then I said that you need to know what is change of character. So I said in break of structure, that is when the price is breaking the previous swing highs or the previous swing lows. That is when price break above this and this. So whenever price break above this high here, break above this high here, break above this high here, we have a break of structure. When price break above this low here, break above this low here, we have a break of structure. And then I continue by saying that for a break of structure to be valid, price have to close above this high here with a body, not with a wick. So whenever price close above this high here with a body, we have a valid break of structure. Also, whenever price close above this high here with a body, we have a valid break of structure. Whenever price close below this low here with a body, we have a valid break of structure. So now you have understand what I mean by break of structure. Then let's talk about change of character. So I say that change of character is whenever price is showing you, giving you a warning that any moment from now, I'm going to be going from bearish to bullish, or I'm going to be going from bullish to bearish. That is whenever price is telling traders, any moment from now, I'm going to be going from uptrend to a downtrend. I'm going to go from downtrend to an uptrend. So I say that it's whenever price is giving you something like this, we are going on, doing higher highs and higher lows. And then all of a sudden, price break past this higher low here with a body. So this is what we can call change of character. Price have started telling you, any moment from now, I'm going to start from doing uptrend to a downtrend. So, and then you still have something like this, price pull back, and then break another this one here. So you know that this change of character is valid because price give you a warning that I'm going to be going from bullish to bearish now. And then it happened. You can see after this first one in here, what happened is the price pull back to this zone here and then go down. So this is what we mean by change of character. There is no need to complicate anything. So I'm going to dive deeper into market structure. So in market structure, we have what is called external structure and internal structure. So what is external structure? External structure is the major time frame structures. Are you getting me? The major time frame structure. In other words, you can say the higher time frame structures. That is, for example, 4 hours time frame. We have daily time frame, we have weekly time frame, and then thereabouts. Also, some people can call 1 hour time frame as a higher time frame. That is if you are a scalper, or even 15 minutes time frame as a higher time frame. That is if you are a scalper. So let me show you what I mean. This is assuming that this is a 4 hour time frame or a daily time frame, and then we have break of structure here, we have break of structure here, we have a break of structure here. This is a major market structure, or you can say external market structure. Do you know the reason why this is a major market structure? Because inside this particular push here, if you go down, if this is a 4 hours time frame, if you go down to a 15 minutes time frame, you will see another higher highs here, higher highs here. But in a 4 hour time frame, it's just a one push. If you go down to lower time frame, which is 15 minute time frame, you will see a higher highs and higher lows here. And so this is the reason why this is called external market structure or external structure of the market. If you come over here now, we have a break of structure here. This is a 4 hours time frame. Remember, if you go over to 15 minutes time frame on this particular chart, if you mark this particular chart now and then go over to 15 minutes time frame, what you will be seeing here is another higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is what you will be seeing here. So because there are movement inside movement, are you getting me now? I hope you are not confused. There are movement inside movement. What I mean by that is this particular movement now, which is 4 hours time frame. If you go over to 15 minutes time frame, there are movement inside this particular movement here. So if you can see in 4 hours time frame, it's just a one push. But in a 15 minutes time frame, there are higher highs and higher lows if you go over to 15 minutes time frame. So this is the reason why this is regarded as external market structure or external structure of the market. I hope you understand it now. So this is the reason why this is called external structure of the market. So apart from external structure of the market, we have what is called internal structure of the market. So what are the internal structure of the market? If you can remember, I showed you that if this is a higher structure of the market, external structure of the market, and I showed you that if this is a 4 hours time frame, that if you mark this particular zone here now and then go over to 15 minutes time frame, that you are going to see higher highs and higher lows. So this is what I mean by internal market structure. It's a lower time frame movement, lower time frame direction, lower time frame pattern of movement. It's called internal market structure. This is clear and simple. So take it in a way that if this is a 4 hours time frame now, external, what is the simple meaning of external? External is something that is outside, like something that is more visible. If you say that this thing is external, it's more visible. You can see it more clearly. And then if you look at the chart now, you can see that you can see this more clearly. You can see that this is a higher time frame break of structure. You can see that this is a break of structure. Then internal is what is inside. What is inside? And if you look at this chart now on the 4 hour time frame view, you might not see the movement that is happening inside here because it's inside. But when you go over to 15 minutes time frame, you start seeing this movement happening over here. You start seeing higher highs and higher lows. So this is what it means by internal market structure and external market structure. And another thing you need to understand is when I said external market structure, it does not necessarily mean that it will always be a 4 hour time frame. So let me show you something you need to know now. If you go over to weekly time frame and then you see market doing something like this, breaking the previous highs and then giving us higher highs, higher low, higher highs, higher low. You see, this is a weekly time frame. If you go over to 4 hours time frame now, 4 hours time frame will serve as internal market structure here, while weekly time frame will serve as external market structure here. So if you go over to 4 hours time frame now, what you will see that market will be doing higher highs, higher lows, higher highs, higher lows. You see, that's because this is bigger than this. So because this is bigger than this, you can call this external market structure and then you call this internal market structure. Because when you're looking at this chart now, you can see the clear movement of what is happening. But inside this movement here, there is highs and lows inside this movement here. That highs and lows, that particular time frame that you have that highs and lows is what is called internal market structure. I hope you understand it now. There is nothing to complicate here. So now you have understand what is market structure. You have understand everything you need to know about market structure. I will go over to the chart to show you a clear example of what I mean by market structure. But before I go over to the chart, I promise in this video that I'm going to combine market structure, supply and demand zone to show you how you can use these three confluence and get high a probability trade or what you call a plus setup. So let me show you what is demand zone. I'm not going to break down what is demand zone or supply zone in this particular video, but in this particular video, I'm going to make a separate video about supply and demand zone. I'm going to give you a details of what you need to know about a valid supply zone or a valid demand zone in that particular video. But in this video, I'm just going to show you what is supply and demand zone, which you already know. So what is demand zone? Demand zone are that particular areas where buyers step in, where institutions step in to continue pushing price to the upside. So by now looking at this chart now, we have a demand zone here. And then if price reacts from this particular zone, there is a possibility that you have a demand zone here, something like this. So whenever price tap into that demand zone, it continue going up. Meaning of so this is a simple meaning of demand zone. Demand zone is an areas where buyers step in to continue pushing price to the upside. where institutional traders step in to continue pushing price to the upside. So whenever you have something like this, and then price come back to this demand zone here, you see, price will start going up again. So this is a clear demand zone. So let's go over to supply zone. What is supply zone? Supply zone is a clear opposite of demand zone. Is there areas where traders step in to continue pushing price to the downside. So if price reacted from here, there is a clear possibility that this is a supply zone. If you go over to the chart, you see a supply zone here. So this is where traders enter to continue pushing price to the downside, and then price pull back again to the supply zone here, and then traders enter to continue pushing it down to the downside also. So this is a clear meaning of supply zone. It's an opposite of demand zone. Demand zone is where traders enter to continue pushing price to the upside, while supply zone is where traders enter the market to continue pushing price to the downside. So now I have teach you everything you need to know about market structure. Let's go over to the chart so I can show you the clear example of what I mean by market structure, and then supply and demand zone, and then also how you can combine market structure, supply and demand zone to get a high probability trade. So let's go over to the chart. So with everything that I have teach you since, if you look at this chart, what is the chart doing? Just by me looking at this chart now, you can see that the market is in a downtrend, which means that XAUUSD has been in a downtrend because we are seeing lower low here, lower high here, lower low here, lower high, lower low, lower high, lower low, lower high. So according to what I teach you, I told you that whenever you look at the market and the market is doing lower low, lower high, lower low, lower high here, we have lower low here, we have lower high, we have lower low, we have lower high. So whenever you look at the market and the market is doing this, it means that the market is in a downtrend. There is nothing to complicate here. So let me show you example of uptrend when the market is in an uptrend. So this is an example of an uptrend here. So by me looking at this chart now, you see that on this particular area, market was in an uptrend. Can you see it? In the sense you are seeing market doing higher highs. Can you see? Breaking the previous highs with bodies. So you don't need anybody to tell you that this is an uptrend. Markets have been going on, doing higher highs and higher lows. So this is what happens when you understand market structure well. By merely looking at the market, you can tell that if this market is in an uptrend, if this market is in a downtrend, or if this market is ranging. So let me show you an example of when the market is ranging. Okay, so this is an example of when the market is in a range. So can you see it here? On this particular zone here, this is what happened. Market is not breaking the highs, it's not breaking the lows. It's just on this particular region, ranging, respecting the previous resistance and the support zones. So this is what it means by market is in a range. Remember, I told you whenever the market is in a range, this is what you'll be getting. You'll be getting something like this. Market is not going to break the previous high, and it's not going to break the previous lows. So this is the clear meaning of ranging or consolidating. So now you have understand the market structure I taught you on the chart. I have already shown you an example of what I mean by market structure, types of market structure, uptrend, downtrend, consolidation. Now I've already shown you the example on the chart. So let me show you the example of what is a clear break of structure and change of characters. So let's use this particular area now for example of what is break of structure and change of characters. So can you see what is happening here now? Market break past this high here. Market break past this previous high here with a body and continue going on. So this is a clear break of structure. This here now is a clear break of structure. Can you see it? Whenever price break the previous highs or the previous low, this is a clear break of structure. Can you see it now? There is nothing hard here. This is a clear break of structure here also. This is a clear break of structure here also. So whenever you see price break above the previous swing lows or swing highs with a body, this is what I mean by a break of structure. So let me show you a clear sign of what is change of character. Can you see what happened here now? Let's use this particular chart for example here now, so that you can understand what is change of character. You see on this particular chart that price was breaking the previous swing highs and then keep going up, giving us a valid break of structure. You see, this shows you that the price is in an uptrend. Price is giving us higher highs, higher lows, higher highs, higher lows. This is a clear example of uptrend. So what happened next on this chart? Price come and break below this higher low here. Remember what I said, that is change of character. Change of character is simply a warning that price is telling traders that any moment from now, I'm going to be going from bullish to bearish. So this is a clear example of change of character. So you can see what happened here now. Price was going up, and then all of a sudden, price break past the previous higher low here. You see? Then after the breakout, you see what happened? Price pull back and then continue going down. You see, this thing that happened here now is a clear change of character. Whether it's happening in a higher time frame or whether it's happening in a lower time frame, this is a clear sign of change of character. Okay, let me show you another thing now. You see, when the price break past this low here now, giving us that price have shifted bearish, and then you see what happened after the pullback. Then price break above this swing low here now, giving us a break of structure here now, and meaning that price have shifted bearish. Do you see what happened again? Price break past this previous high here, giving us a change of character again. So this is price telling traders now that any moment from now, I'm going to shift from going bearish to bullish. And then you see what happened after this break of structure here, price pull back and then continue going up. So if you had ignored this one in here, price would have stopped you out if you enter the trade. But smart traders that know that price have already given us a sign that it's going to shift from bearish to bullish, we have to position ourselves on this demand zone here, enter the trade here, and then continue going up. Because price have already shown you that I'm going to be going from bearish to bullish on this particular area here now. Can you see? So this is a clear definition of change of character. It's so simple to understand. So now you have understand the clear meaning of market structure, uptrend, downtrend. You have understand what I mean by break of structure. You have understand what I mean by change of character. Let me show you what I mean by internal market structure and external market structure. So this is a chart, and this is a 4 hours time frame of gold, XAUUSD. So if you look at this particular region here now, this is a 4 hours time frame. If you look at this particular region here now that I mark out, you can see this is a clear break of structure. Price break past this previous lower low here, and then this is high, lower high. You see, giving us another lower low, and then lower high. So this is a clear break of structure that happened here now. And then mind you, this is a 4 hour time frame. We're using it as an external market structure on this particular case here now, on this particular area here now, that we have external market break of structure here. Let's go over to 15 minutes time frame, which is my lower time frame. Let's see what happened on this particular zone here. Remember, you can see this is a push to the downside. Can you see it clearly? This is a push to the downside that caused this break of structure to happen. So since this is a push to the downside, let's go over to 15 minutes time frame and see if this is going to be a single push or we are going to have lower lows, lower highs. So let's go over to 15 minutes time frame. So these are the areas that we mark out on a 4 hour time frame. This is the single push that I showed you on a 4 hour time frame. Remember, on a 4 hour time frame, this is a single push that breaks this structure here. Can you see it? But currently we are in 15 minutes time frame right now. So let's see what happened in that 15 minutes time frame. Can you see it? This is a 15 minutes time frame. Can you see what happened on the 15 minutes time frame? On a 4 hour time frame, you have it as a single push. But on a 15 minutes time frame, this is what happened. Price was doing lower low, lower high, lower low, lower high, lower low, lower high, until it breaks that 4 hours time frame structure. This is what I mean by internal market structure. This particular chart I give you now, market was in a downtrend in a 4 hours time frame. And then this is the particular place that I mark out. And then you can see that this particular place now, this is a single push. This is an example of what I told you. This is a single push in 4 hours time frame. Do you see what happened? But inside this single push here, there is movement, which is the movement you can't see on a higher time frame. Whenever you go in lower time frame, you see this movement, making it the internal market structure. The movements happen inside. Why external market structure? If you go over to 4 hours time frame, you can see that all this lower low, lower high, lower low, lower high here is a single push in a 4 hours time frame. Now I hope you understand what I mean by market structure. internal market structure and external market structure. So since you have already understand what is market structure, you have understand the type of market structure, the uptrend, the downtrend, the consolidation. You have understand the properties of market structure, the breakout structure, the change of character. You have also understand the internal market structure and the external market structure. So let me show you demand and supply zone. Remember, in this particular video, the aim is not to teach demand and supply zone. I want to show you guys how you can combine demand and supply zone with market structure to get an A plus setup. So let me show you example of demand and supply zone. These are the obvious supply zone you can see by me looking at the chart. This is a supply zone. This is a supply zone. Can you see it? By me looking at the chart, you start seeing the supply zones. So the aim of this video is not to teach supply zones or demand zone. The aim of this video is to teach market structure. But I want to show you guys how we can combine market structure, supply and demand zone to get an A plus setup. So whenever the market is in a downtrend, you might look to observe the supply zones to sell from those supply zones. So I say that supply zone is areas where sellers enter the market to push it to the downside. Can you see it? Do you see what happened? This is a supply zone here. Can you see it? So what happened is that price pull back to this supply zone here, and then due to this is a supply zone here, sellers have to enter this supply zone here and then push price to the downside. Also, this is a supply zone here. Price pull back to this particular supply zone here. Sellers enter this supply zone and then push price to the downside. Can you see it? So I see that supply zone are areas where sellers enter the market to push price to the downside to continue doing lower lows, lower highs. So that's the meaning of supply zones. So let's look for an uptrend so I can show you the meaning of a demand zone. Okay, so this is a clear demand zone here. Can you see it? It's clear. So in the sense that we have a break of structure here. Can you see it? And then after a break of structure here, demand zone, as I said, is areas where buyers enter the market to continue pushing price to the upside. So this is a clear supply zone here. These are the areas where buyers are looking forward to enter the price again, to enter the market again, to enter the trade again. So whenever price comes to this particular area, it will go up. You see what happened? Price have to come to this particular area, and then you see immediately price come to this particular area, this particular demand zone that buyers want to enter the market. Buyers enter the market, and then you push price to the upside. Can you see it? Do you see this particular area again? After this break of structure, buyers, this is a place where buyers want to enter the market. So whenever price pull back to this zone here, buyers will enter the market again and it start going up. And you see what happened after this break of structure and then pull back. Buyers enter this particular zone here and then market start going up. Can you see it? It's clear. There is nothing to complicate here. As well as supply zone here. You see, this is a clear break of structure here. After this break of structure here, this is a place where sellers want to enter the market. You can see what happened. Immediately price come to this area that seller want to enter the market and then they start pushing price to the downside. Can you see it? It's clear. Now you have understand everything I want to teach you in this video. So what is going to happen now is that I'm going to show you how to combine all these things together, get an A plus setup. How to combine market structure, supply and demand zone to get an A plus setup. The video is getting too long, so I'm going to be brief about it. So for example now, let's take this. You have a break of structure here, showing that the market is in a downtrend. And then inside this break of structure here now, as I showed you in that particular video, this is a supply zone. And then this is a supply zone also. You can remember that I said that whenever price is in a downtrend, you might want to be looking for a sales. You might want to be looking for a supply zone instead of demand zone, because supply zone is where sellers enter the market to continue pushing price to the downside. And then if you look at the clear view of this market, you can see that the market is in a downtrend. So you might like to be looking for a sales on this particular supply zone that you mark out here. So whenever price come to this particular zone here and give you confirmation, continue pushing price to the downside. And then you can see what happened. Do you see what happened? Price come to this supply zone that we mark out here now. And then continue going down. Can you see it? It's so clear. Let me show you another example here. So this is a break of structure here. And then if you look clearly, you can see that we have a supply zone on this particular area here. This is a supply zone here. And then if you look clearly, you can see that this is a clear downtrend. Price have been going down. And then you see what happened. I told you that whenever you see the price is going in a downtrend, you might like to be looking for a sales. So since we have already marked out our supply zone on this particular area, you can see what happened. Price to pull back to this particular area and then continue going down. Immediately price pull to this particular area, sellers have to enter the market and then continue pushing price down because price have already come down to that place where sellers are waiting for to enter the market. So this is a high probability trade. So this is a clear example of how to combine market structure, supply and demand zone to get a high probability trade. So if you have watched this video to this extent, I'm sure that you must have understand the meaning of market structure. Anything you need to know about market structure and how market structure works, you understand market structure, the type of market structure, the uptrend, downtrend, consolidation. You understand the properties of market structure, the break of structure, the change of character. You understand the internal market structure and external market structure. And then you have also understand how to combine supply and demand zone with market structure to get a high probability trade. So if you're watching this video to this extent, make sure you like, share, follow, subscribe, turn on your notification bell so that you can get notification when I post another educational content like this. Then see you guys in my next video. And if you have anything to say or any question regarding to what I teach in this video, do well to drop the question or your comment in the comment section. I'll be there waiting. Alright, see you guys in my next video.